Hi there, welcome to kneppyinvests. We are heading towards the end of the financial year, and usually before we get to the end of the financial year, a lot of companies or the management of companies realize that the company they're managing is either performing well above expectations or well below expectations, and they will release profit upgrades or downgrades. That is called confession season. And typically, as we head toward the end of the financial year, which we are right now, this is the last week of the financial year, most management teams of companies have already realized how well or badly the company is performing. So we've seen most of these confessions come through in the previous month or even 2 months. However, we have seen a trickle of these announcements come through in the last trading week. And in this video, I will discuss a couple of those companies. So this is Kneppy's ASX Stocks of the Week, 21st to 25th of June. This is episode of this video series. The 5 companies I will be talking about today, most of them, well, actually I think 4 of them did release a trading update or even a profit upgrade, and one of these companies did release news about a new contract. So let's get into the first company, and that company is Intergrated Research. This is a software company, market cap of 344 million with revenue of 92 million and operating cash flow 22. So based off those numbers, which is a little bit down than they've seen in the past, but based off those numbers, you would say this company is slightly overvalued if they can't grow in the next few years. But looks like, based off this trading update, things are starting to turn around, because this company was, or the performance of this company was in the doldrums, you could say. And you can just see that when you compare the expected revenue for this half year to the actual revenue in the first half of this financial year, and then the actual revenue in the second half of financial year 20. Things were, going really badly for Integrated Research when you compare second half of financial year 20, $57.7 million in revenue, and that fell to $34.1 million in the first half of this financial year. Things have turned around. They expected a bit of an uplift in that revenue to between 40 and 45 million. Things are also improving in the net profit after tax, even though they did see 12.2 million in the previous half year of financial year 20. That did fall to $0.1 million in the first half of this financial year. However, they do expect a net profit after tax to be between 4 and 7 million. One of the things I did like about this announcement was there was a bit of a positive vibe in the talk from the management. They just mentioned recent sales momentum provides a level of confidence that recovery is underway and the second half performance will be stronger than the first half. I should just mention there, they should know right now that the second half will be better, simply because we only have 1 week to go in this financial year. So that should not be a surprise to them or even us. But just the fact they're saying that sales momentum is coming back for the business. So has this translated to the share price? So let's have a look at the chart right now and see if this was a breakout in the share price. Unfortunately for Integrated Research, this was not the catalyst for a breakout in the share price. It was potentially, however, there were a few things going against Integrated Research. The chart here goes back just over a year. About a year ago, the share price of Integrated Research was in a nice little uptrend. The share price went to a high of $4.50 in about August of last year, so just before they released their full year results. From then, the share price has been falling. In fact, I'd say the big catalyst for the shift in sentiment was their full year results last year. And ever since the full year results, the share price has been in a well-defined downtrend. When they released the half year results on the 18th of February, initially, the market liked it. Share price went up 1% one day. The next day went up another 1%. However, a few days after they released the half year results, the share price fell off a cliff, down 11% one day and then down about 8% the next day. Since then, the share price has been quite volatile. You can see big movements up and down. However, unfortunately for Integrated Research and its shareholders, the share price has fallen a fair bit in the last month. In fact, it's gone from $2.50 to a low of $1.90. When they released this trading update on the 21st of June, the market did like it initially. Share price was up 8%. However, because the share price has been falling in the past month, there was a bit of resistance there. And that resistance is just the psychology of those investors, we'll call them investors, who've bought in the past month, they've seen the share price drop of Integrated Research. They thought they've made a mistake and they just want to sell out of this dog stock now. So they saw their opportunity with the share price rising on the back of this trading update. They saw the share price rise and they saw their opportunity to sell out. So we did see more shares come onto the market as sellers saw their opportunity, and those sellers were not able to be met by the buyers coming into the market. And that's why we actually have seen the share price drop after the release of this announcement over the last few trading days. I have put Integrated Research onto my watch list. I'm going to closely follow the share price action over the next month, particularly before they release their financial results, full-year financial results in August. So still have maybe about 2 months to go. Hopefully during those 2 months, we might see a consolidation in the share price. And hopefully with a consolidation in the share price and some good results coming out from the company, maybe that will be the catalyst for re-rating into Integrated Research share price. Traffic Technologies, the second company I'll be talking about, provides traffic solutions. So they design, manufacture, and install traffic signals, traffic controllers, pedestrian countdown timers, and many, many more. Very small company, market cap of only 20.2. But when you compare the market cap to the revenue and the fact they are operational cash flow positive, you might think maybe there is some good value there. However, if you look at the financial history of this company, they've been around for quite a while. We haven't seen much growth in their business over the past, say, 8 years or so. So keep that in mind if you get excited about the potential value here. However, Traffic Technologies did release a trading update on the 25th of June. So they are expecting improved revenue from 44.5 million to a range of 51 to 53 million, and EBITDA to improve from 1.4 million to between 4 to 4.3 million. So those are quite good improvements in the company's performance. And the question is, can they continue that sort of momentum going through the next few years? That's where I have my doubt, simply because this company has been around for quite a while and they really haven't grown all that much. The other thing is the stuff they do provides traffic solutions. Doesn't seem like the sort of business where you would see significant growth in the business. Let's have a look at the market reacted positively to these news. It does look quite positive on first glance, but just because it looks positive on first glance doesn't mean the market will react positively to it. The share price of Traffic Technologies has increased over the past year from about 1.5 cents to a current share price of 4.2 cents. Recently, the share price of Traffic Technologies has gone into a high of about 6 cents in February. However, over the past few months, say 3 or 4 months, the share price has not really done anything. You can just see with these candlesticks, you can see big drops and big rises in the share price. And that is probably because the shares of this company are illiquidly traded. So that's why you see fairly wild swings. And on the day they released this trading update on the 25th of June, share price initially rose about 10 to 15% on open from the previous close. However, there was a bit of selling coming into the market, and that drove the share price down during the day. And overall, the share price was only up 2%. And just like Integrated Research, we did see some resistance because the share price has been higher over the past 3 or 4 months. And those investors who bought into this company over that period saw their opportunity to get out at a lower loss or maybe at a break-even level. Ideally, when I see a breakout in the share price on positive news, I do prefer to see the share price open at least a 6-month high. So there's less resistance like we've seen with Traffic Technologies and Integrated Research. And we'll see an example of that in the next few companies. Onto one of the most popular companies on the ASX, among retail investors anyway, Tesserent. This company, internet security company, has a market cap of 271 million, revenue of 44 million in the last 12 months, and operational cash flow negative of 3.3. And saying all that, they will see significantly higher revenues in this financial year and possibly operational cash flow positive. If they don't reach operational cash flow positive this year, more than likely they definitely will in the next financial year. On the 22nd of June, they did upgrade their turnover for the year from 150 million to 180 million. That seems like a significant upgrade. So did the market react as though it was a significant upgrade? Well, let's have a look at the chart and we'll see that the market absolutely loved this announcement. Things were going hot for Tesserent during the latter period of 2020. They saw the share price rise from about 7.5 cents to a high of 44 cents in January of this year. We have seen the share price been under pressure since that high in January, going from that 44 cents to a low of 18.5 cents. So I have been paying close attention to the Tesserent share price. I was or have been waiting for a potential breakout, and we may have just seen that on this upgrade on the 22nd of June. Share price rose 27%. In fact, the share price finished or closed the day at nearly the high of the day, and that's a fairly bullish sign. And then the next 3 trading days, the share price went sideways. Again, that's fairly bullish sign. I mentioned in the previous video with Traffic Technologies that I usually want to see at least a 6-month period from the high of the breakout or potential breakout and the previous high. In the Tesserent's case, that is about a 4 or 5 month period. So that's just on the borderline. And I think this is a potential breakout. I haven't quite bought in just yet. The share price action over the past few days, I mentioned before, is quite good, quite healthy. We haven't seen a drop in the share price. Not a lot of sellers have come into the market, take advantage of this share price rise of 27% on the day they released this announcement. So it seems like shareholders love it. Seems like non-shareholders have loved it as well, have that because they've been buying, and I might be buying potentially in the start of the new trading week. This is one company I'm definitely keeping a close eye on, particularly because of the market reaction over the past 4 trading days. The next company I want to talk about, Supply Network, is not really a company I've followed that closely. However, that might be a mistake on my part because when you look at the chart, you can see a well-defined uptrend. And for the purposes of this video, I did a little bit of research on their financials over the past 8 years or so, and we have seen some good, solid growth, consistent growth in revenue, operating cash flow, profit after tax, that sort of thing. And also, the market cap has been growing alongside those metrics as well. So this company has been growing quite consistently, and that is a good sign for the future of this company. Supply Networks do provide parts to commercial vehicles like trucks and buses. So you wouldn't say that's a very sexy business. However, they found a fairly good niche and they're taking advantage of that niche quite well. Market cap of 230 million, revenue of 147 million, and operating cash flow of 14.5. They released a 4-year guidance update on the June 25. A very succinct announcement. In fact, what I've given you here is all they said in the announcement. The directors are pleased to advise, based on continued strong performance, consolidated sales revenue for the year is expected to be around 162 million, with profit after tax of around 13.5 million. In isolation, that means nothing. I would have rather the company's management put in the previous year's numbers to see how it's grown over the past year. So I provided that right here. Financial year 20 revenue was 147.3, so they're going to grow revenue from that to 162, and net profit after tax in financial year 20 was 9.5, so they've grown that about 50% for the financial year or the last year. More than likely, that momentum may not continue in the next year. Things might slow down, so I wouldn't get too excited about the growth in the business over the past year. And I think the market, sort of the same as me, they didn't get too excited. If we saw this without any COVID, if we saw this in the normal running of the business, I think the market would have reacted to this news considerably more positively than it did in the end. So let's have a look at the chart and see the reaction from the market. During the COVID-19 financial panic, Supply Network's share price fell to $3. The share price of this company has been rising over the past 10 years at a good, consistent rate, just like how the business, Supply Network's business, has been growing at a good, consistent rate. From that low in the COVID-19 financial panic, the share price has moved into a nice uptrend. But during this uptrend, you can see some wild swings in the share price from day to day. And that's just the fact that the shares in this company are illiquidly traded. If you do take a position in this company, you have to realize that there is a bit of volatility in the share price. It could fall 8-9% in one day with no news, just because one shareholder wants to take some profits. However, it could move up the next day 10%. When the company released a trading update on the 25th of June, the share price rose 4% and finished at an all-time high. There are some investors who run away from share prices of companies that are all-time highs. However, that's exactly what you want as a shareholder. You want the share price of the company you own to continually get all-time highs, and that's exactly what Supply Network has been doing over the past about 6 or 7 months. It keeps getting to all-time highs. Not every day, and sometimes you might have to wait a month or 2 months for that new all-time high, but this company keeps getting all-time highs, and that's because the business keeps on improving. This could be quite a good small cap company to own in your portfolio for the long term, simply because the company is, doing better every single year over the past 8 years. The final company I want to discuss in this video is Addisel. This is industry leader in advanced air traffic management and air traffic control simulation and training systems. I know that because I can read it straight from the screen here. Market cap of $72 million, and with revenue of $40.6 million and operating cash flow of $8.2 million, you might say this is really good value at these prices. The reason I've included in this video is they did announce a $3.6 million contract with Seychelles Civil Aviation Authority, or SCAA. Typically, I don't really fall for these sort of announcements where it's only one contract, because we don't know the margins, we don't know anything like that. However, this company has gone through some problems in the past 3 or 4 years. I'll tell you about that when we look at the chart in a second. The market did like this announcement when they released it, and that's the main thing. So let's have a look at the chart right now and see how the market did react to this news of this pretty good contract with Seychelles Civil Aviation Authority. Before we look at Addisel's daily chart for the past year, just wanted to go back in time to 2013 and 14, and here we have the weekly chart so we can see what's happened with the share price of Adacel during that time. Very interesting chart indeed. Back in 2013 and 14, the share price was around 25 cents or so. We saw a bit of a breakout in the start of 2015, and the share price rose from that 25 cents to a high of $3.50 in May of 2016. So in about a year, the share price rose by about, we'll say, a 14 bagger. A great time to be an Adacel shareholder. They were increasing their business. They did fall on some tough times. They did lose contracts, that sort of thing, and that saw the share price really take a massive hit and fell all the way back to not quite 25 cents, but about 37.5 cents. We have seen the share price recover over the past 6 or 8 months, and we'll have a look at that when we look at the daily chart. So just based off the weekly chart, it does look like the share price is turning around from that, say, about a 2 or 3 year downtrend period. And if the share price gets above about $1, that could be another sign the share price of this company is breaking out. So let's have a look at the daily chart to see if we do see a bit of a breakout in the daily chart. In the second half of 2020, we did see 2 breakouts in the share price of Adacel. On July the 6th, the company released a profit before tax upgrade, and the share price rose 25% from about 40 cents to over 55 cents or so. And then just over a month later, they released their full-year results, and the share price rose 31% on the back of that. And we've just seen the share price rise ever since then. We have seen the share price get to above $1 twice, once in December of last year and then again in February. And both times the share price got to just above $1, there was a bit of selling. So it seems like $1 or just above $1 is a natural resistance level for Addisel. On the day after they released this announcement about the SCAA contract, we did see the share price get right on $1, and then again some selling came into the market. However, on the day they released this contract news, the share price did rise 7%. I will be following the share price movement of Adacel over the next few days. If we do see the share price move above around about $1.05, that will be a good sign that there is a breakout in the share price of this company. And that is all I have for this third edition of Kneppy's ASX Stocks of the Week, 21st to 25th of June 2021 edition. If you have any questions about the companies I've talked about in today's video, or any other company on the ASX or any other exchange around the world, leave a comment or a question in this comment section of this video, and I'll answer anything you have to say ASAP. The final thing I have to say is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Talk to you later. Bye.